Well, for more on the BOJ Bank of Japan decision to hold off on any further action and its impact on the markets, we're joined from Portland, Oregon by Keith Fitz-Gerald. He's the Chief Investment Strategist for Money Map Press and the Chairman of the Fitz-Gerald Group. Keith, thanks so much for joining us tonight. We're going to get straight into
Thank
it.
you for having me.
Thank you. World share indices fell across the board today after the Bank of Japan held off taking any new measures to calm the markets. Why were global markets so rattled by this?
Well, do you remember that old adage, don't fight the Fed? It's now don't fight the Feds is plural. The markets have gotten ahead of themselves based on nothing more than expectations of cheap money. The problem with this is like trying to cure an alcoholic by giving him another drink. You run out of options very quickly, and it does very little to actually improve the situation.
Well, this has been going on, as you say, not just with the Bank of Japan, but also in the US and in the European markets. So do you think the Bank of Japan did the right thing by doing nothing to calm the volatility?
You know, that's very hard to say. I view the Bank of Japan as the single biggest danger to global markets today, and that's because the nature of their stimulus program is simply unprecedented in history. Instead of trying to bleed risk out of the system, they're trying to kick the can down the road and hope nobody notices. They say that they want time to let the markets adjust. The problem is today's markets do not have a lot of time. We have to do something about this, whether we want to or not.
Well, kicking the can down the road seems to be the same policy taken by other central banks around the world. I mean, the Bank of Japan is not doing anything majorly different from what the US Fed has done, really.
No, that's a very accurate point. And Bernanke is playing much the same game as is our Congress, unfortunately. The people forget, or the leaders forget, that failure is an integral part of capitalism. If they want to succeed, if they want financial systems to survive, they're going to have to reintroduce that. And that's the problem here, is by doing nothing, the markets perceive that as not allowing this to continue, and not allowing risk to enter the system.
Well, one of the reasons that the Bank of Japan's Kurudo said that he did nothing and kept interest rates and the asset buying program unchanged is because he says that there has been some economic recovery in Japan. Do you agree with that? Do you agree that there are signs of economic recovery?
Well, I do. I'm there frequently. I live there part-time every year. And yes, I see signs of it. Consumer spending is certainly up. Manufacturing is up. But the problem is something that nobody's tapped into yet. Japan is uniquely dependent on external energy sources. Its imports now outnumber its exports. The costs associated with that have not yet worked their way into quarterly numbers. So while it looks good and Japanese corporations are turning in good numbers right now, 1 quarter, 2 quarters, 3 quarters from now, when energy costs and manufacturing materials costs are built into the system, I think the P&Ls are going to look very different, and analyst expectations will be revised in the opposite direction.
So you don't think that Abenomics is working as well as it should so far, and certainly not with the goal of reducing inflation?
Well, that's a very tough question. You know, is it working? Is it working as well as expected? You know, I think that the game you play as a child continues as long as the music plays and you have a chair to sit in. The problem is when the music stops, everybody's looking for that last chair. We don't know what's going to happen long term with regard to Abenomics. Short term, it's going to feel good because it's going to do exactly what he wants, which is inject spending into the economy. Longer term, this has never worked. There has never been a single instance in recorded history of mankind where stimulus has worked. So the question really is when, not if, this will break down.
Longer term, as we've said, other governments and other economies will be facing a very similar fate. But one of the main and immediate goals of Prime Minister Shinzo Abe has been to try and to weaken the yen to boost exports. But that doesn't seem to be working because lately the yen has actually gained 3% against the US dollar. Why is this backfiring?
Well, that's an interesting question. The yen has traditionally been one of 2 currencies that everybody goes to when the world gets into a tough situation. They go to the dollar and they go to the yen. And the reason they go to those 2 currencies is because neither of those governments has defaulted on their debt historically. The problem we're seeing today and why the yen strengthened unexpectedly despite this news was simply a reflex from traders worldwide who are seeking safety. It's better to go with something you know than the devil you don't.
Rather the devil you know. We're going to have to leave it there, but thank you so much for that insight. Keith Fitz-Gerald, Chief Investment Strategist for Money Map Press and chairman of the Fitz-Gerald Group.